Hello, I'm Eddie Adkins. I'm a certified public accountant, and I spent 26 years as a tax partner in two major accounting firms in Washington, D.C. I'm retired now, and one of the things I'm doing in retirement is making videos to help people understand tax issues. I'm really excited about this video because it brings some great news. What is the news? What's the big news? Well, if you received unemployment compensation during 2020, and by the way, 23 million people received unemployment compensation during 2020. So if you did, and you've already filed your income tax return for 2020, you are going to get a tax refund from the IRS, and we all love tax refunds. So this is really good news. So why are you going to get a tax refund from the IRS? Well, prior to a very recent change in the law, the full amount of your unemployment compensation was taxable. So, of course, individuals filed their tax returns for 2020, treating the unemployment compensation as fully taxable. But then in March of 2021, so yes, well after the end of 2020, a new law went into place that looks back to 2020 and excludes the first $10,200 of your unemployment compensation for 2020 from taxable income. So let me give you a couple quick examples of how that works. Let's say that your 2020 unemployment compensation was $20,000. Well, when you filed your original return and you didn't know about this change in the law because it hadn't even happened yet probably, you would have reported the full $20,000 as taxable. But now you get to subtract $10,200 from that. That gives you $9,800 if I'm doing the math right in my head. So now instead of paying tax on $20,000, you'll pay tax on $9,800. Just another quick example, let's say your unemployment compensation for 2020 was $5,000. You'll get to exclude the entire $5,000 from your income and not pay tax on any of your unemployment compensation. And a very important point for a married couple, if they both got unemployment compensation in 2020, they each get the $10,200 exclusion. So they may be looking at an exclusion of up to $20,400. So that will make a big difference in their taxes for 2020. A word of caution, the new law actually does not apply to everyone. Very specifically, it doesn't apply if your total income for 2020 was $150,000 or more. I'm putting a link in the description to this video to give you the details on that. So if you're concerned that you may be bumping up to that limit, you'll find details on how to calculate the $150,000 limit. For most people, they're not close to that limit, so they don't really have to worry about that at all. So why will you be getting a refund from the IRS? Well, the answer is really simple, and you probably have figured this out already, but it's important to say it. When your taxable income goes down, which it will now because a lower amount of your unemployment compensation is being taxed, so your taxable income goes down, your income taxes will obviously go down and you'll be due a refund. Now, who gets the refund? Well, anyone who's already filed their 2020 income tax return and reported all of their unemployment compensation as taxable will get a refund because, once again, the great news is, turns out, due to the change in the law that was enacted in March of 2021, not all of your unemployment compensation is taxable. So it's simple. It's as simple as that. What do you have to do to get the refund? That must be one of your top questions. And the great news is nothing. You don't have to do anything to get the refund because the IRS announced on March 31st that it will automatically process refunds. So you do not have to do a thing. And here's something that's really important. Do not send an amended return to the IRS reflecting this change in the law. They do not want you to do that, and you don't want to do it either because if you do, it may delay your refund. In fact, it's very likely that it will delay your refund. So just sit back and don't do anything and you'll get your refund. The next question, or one of your top questions, I'm sure, is when can you expect the refund? And the IRS has said that they will start sending refunds in May and that refunds will continue into the summer. Now, what is the order of processing at the IRS? So they've said they're going to process refunds in 2 phases. The first phase will be taxpayers eligible for the up to $10,200 exclusion. So those taxpayers will be the first refunds that are issued by the IRS. Again, that will start in May. Then the second phase will be married filing jointly taxpayers eligible for the up to $20,400 exclusion, and others with what the IRS is referring to as more complex returns. They've not defined what they mean by that, so we're not sure. Those are the 2 phases. That's the order in which they're going to process the refunds. Now, what will the IRS consider in determining your refund amount? And there are basically 3 different elements. The first one, I think, is really obvious probably to everyone, and that's just going to be the decrease in your regular income taxes due to the decrease in your taxable income. But this is really important. It's also going to be any increase in tax credits due to the decrease in your taxable income. The IRS is going to calculate that for you automatically and send you a refund. Again, you don't have to do anything. One really good example of this is the Earned Income Tax Credit. The Earned Income Tax Credit is a credit that's meant for what the IRS refers to as lower to moderate income individuals. And the way the determination of the amount of the Earned Income Tax Credit works is that once you get to a certain level of income, the more money you make, the higher your taxable income, the lower your credit. So that means that if your taxable income goes down, which it will as a result of this change in the law regarding unemployment compensation, so if your income goes down, it actually increases your Earned Income Tax Credit. And so the IRS will process that automatically, and you will get not only the refund of your regular income taxes, but also the increase in your Earned Income Tax Credit. Now, I have a separate video that shows you how to determine the impact of this change in the law on your Earned Income Tax Credit, and I will put a link to that in the description for this video. The IRS will also calculate and include in your refund any change in deductible items affected by the change in your income. So those are the things that the IRS will consider when they're determining the amount of your refund. How can you find out now what your refund will be? I thought it was important to cover this because, of course, it's human nature. You want to know what's that refund amount going to be. Well, first of all, don't call the IRS. You can't call them and find out the amount of your refund. I do have some suggestions for you. First of all, if someone prepared your return for you, ask them to determine the amount for you. Or if you use tax software to prepare your return, then use it to prepare your return again. I'm going to talk about that in just a minute. It's important to make some really important observations about that approach to determining how much your refund is going to be. I also want to say that if you want to sort of do the old-fashioned method, which a lot of people still do, and just do it by hand using paper returns, I'll put a link to Form 1040, the U.S. Individual Income Tax Return. I'll put a link in the description for this video along with the instructions for the Form 1040, which have all the tax tables, and perhaps you can just manually figure out what your refund is going to be using that approach. But let's go back and talk about using software to prepare your return again. A big caution, if you do that, do it for information purposes only. Do not actually file the return with the IRS. Now, most tax software has been updated for the change in the law. So what I'm saying is you can go to tax software, put all your tax return information in for 2020, and that tax software by now should be updated to reflect that the first $10,200 of your unemployment compensation is not taxable. But if you do use tax software to do this, then be sure to look at whether that change in the law is reflected. Look at the results once you key all that in and see how much of your unemployment compensation is showing up as taxable on the return. And if it's still showing the full amount of your unemployment compensation as taxable, then just change the amount of the unemployment compensation that you're entering into the software to reflect the change in the law. So in my earlier example where you got $5,000 of unemployment compensation, you would enter 0 as your unemployment compensation to reflect this change in the law. But again, most tax software should do that automatically for you because the software has been updated for this change in the law. Now, when you do this using tax software, you can look at the amount of tax shown on the return that you just ran, reflecting the new law, and just compare that to the amount shown on your original return, and the difference in those two amounts of taxes is going to be the amount of the refund you'll be getting. So that's a good way to not have to wait until you actually get the refund to find out how much the refund amount is going to be. Now, is there truly nothing you need to do other than wait for your refund and perhaps try to figure out how much the refund is going to be? Well, for most people, there's truly nothing they need to do. Absolutely nothing. Just wait and the IRS will automatically process those refunds. But some people do need to take action. And who is it that needs to take action? Well, if the reduction in your taxable income as a result of this change in the law entitles you to any credits or deductions that you did not claim on your original tax return for 2020, then you are going to have to file an amended tax return to claim the credits or deductions. Now, how can you find out whether you're entitled to any credits or deductions that you didn't claim on your original tax return? That's not so easy to figure out unless you're really an expert in all aspects of the income tax law. So I have some suggestions for you to figure that out. And it's really the same approach as for determining your refund amount. So if someone prepared your return for you, just ask them to help you figure that out. They should be able to do that. And if you use tax software to prepare your return, again, use it to prepare your return again. Now, again, if you do that, do it for information purposes only. Don't actually file that return with the IRS. And so what you're going to do is you're going to look at whether the return prepared by the software, reflecting the change in the law, has any credits or deductions that weren't on your original return. So it's a great way to figure out whether that happens as a result of the change in the law. And if that return is showing any credits or deductions that weren't on your original return, then you will need to file an amended return to get the credits or deductions. But this next point, really, really important. If just the amounts of credits or deductions change, you do not need to file an amended return. The IRS is going to make those calculations for you automatically and send you the refund. So you only need to file an amended return if you have any new credits or deductions showing up on the return as a result of this change in the law. So hopefully that helps you in figuring out whether you may need to amend a return. Most people won't need to amend a return, but I did want to cover this in case you get some new credits or deductions. And I want to give you an example of how that could happen. My example is the Earned Income Tax Credit. It's a credit that something like 25 million taxpayers take every year. It's a really big credit. It can be up to $6,660 for the year 2020. So bear with me. This is a little tedious, but I think it makes an important point. And it's not all that tedious. It's really not. So here's the thing about the Earned Income Tax Credit. At a certain level of income, sort of a higher level of income, you don't get the credit. You have too much income to be entitled to the credit. Now, if you look at line 11 on your income tax return, and that's the adjusted gross income, if the amount on line 11, if your adjusted gross income, before the change in the law, so you've you treated unemployment compensation as fully taxable. If it was equal to or greater than the amount in this table, then you weren't eligible for the credit. You made too much money to be eligible for the credit. And as you can see, this table is based on how many children you have. It's based on your filing status, whether you're single, head of household, or qualifying widow or widower, or married filing jointly. So if your line 11 adjusted gross income was equal to or greater than this amount, then you weren't eligible for the credit. But now, if you decrease the amount on line 11 by your non-taxable unemployment compensation, it may now be less than the amount in this table, and you no longer be in the situation where your income's too high to get the credit. You'll now be under these limits and you will qualify for the credit. And if so, in that scenario, you will have to file an amended tax return to claim the credit. So that's just one example. Now, I want to emphasize again, if you did claim the credit already on your 2020 return, and this change in the law just changes the amount of the credit, you do not have to file an amended return. The IRS will handle that automatically for you. Now, if you have to file an amended return, how do you do that? Well, there's a special form for it. You use Form 1040X. It's called the Amended U.S. Individual Income Tax Return. Just in case you need it, I'll put a link to the form and instructions in the description for this video. Good news, you don't have to be rushed in filing an amended return. You actually have until April 15th, 2024 to file an amended return. You basically have 3 years to file it, so that's a long, long time. Now, you won't want to wait that long, because if you want to get a refund, then we all, of course, human nature, want to get that refund as quickly as possible. But again, you don't have to rush. So, in summary, if you received unemployment compensation in 2020 and you filed your tax return showing it as fully taxable, you're going to get an automatic refund from the IRS. Those refunds will start in May. They will continue through the summer. You don't need to do anything to receive the refund. But if the decrease in your taxable income does entitle you to credits or deductions that you did not claim on your return, then you will have to file an amended return to claim them. That's it. Thank you for watching this video. I hope you learned something, and I wish you good luck in getting those refunds. Well, you don't need luck. It's going to happen. You don't need luck. Just enjoy the refunds and take care.